Hello everyone, it's Vaibhav here. A very good morning, good afternoon, and good evening to all, depending on which time zone you live in. This is the Friday, and of course, this is the last working day before we take the break for the weekend, and then we will be back on Monday with new experiences over the weekend. So for this session, this last session of this week, I am going to use another indicator. This time we will be working with the adaptive moving average, and the name of the moving average is Kaufman's adaptive moving average, which can be shortened as KAMA. And I hope many of you might have used this indicator earlier, and if not, then worry not. I will be explaining to you from the scratch how we can take the advantage of this particular indicator to look for trading opportunities in the financial market. So let us now head to the JForex platform, which has been developed by the Dukascopy Bank SA. Here you will find this indicator listed amongst the overlap studies, and for that you have to look amongst these overlap studies, and here it will be Kaufman adaptive moving average KMA. Otherwise you can do a quick search directly, and there also you can find it listed just below the Kaufman's efficiency ratio. So this is it. And one interesting fact about this indicator is that this has been developed to reduce the lag when there is not much of an price volatility, and increase the lag when there is too much of volatility and the swings are higher. In that case it will move with the lag, but if there is not much of an volatility and the price is rather trending in any direction, uptrend or downtrend, then there will not be much of an lag and it will be a smooth sail in most of the cases. And that is the purpose behind development of this adaptive moving average. And this is the difference between the normal moving averages or other moving averages like simple moving average or exponential moving average, and this adaptive moving average. We can use it more or less like other moving averages, where we can look to define the trend depending on the direction of these KMA. If the prices of the KMA, the output of the KMA is in decline, then we can safely assume that the underlying instrument's trend is bearish. If the KMA is in rising mode, then it is better to assume the underlying instrument's trend to be bullish and look for the trading opportunities accordingly. If it is bullish, then I would advise to keep looking for the buy trade. If the trend is bearish, then it is more advisable to keep looking for short selling opportunities, as we want to be trading on the side of the trend, as we consider trend to be our friend, and trading against the trend carries a lot of risk. So that's why we use all these kinds of method available to us to determine the trend and trade accordingly. So this is one interesting indicator, the KAMA, and there are many differences if we compare it to other moving averages. And here we will not really go into the formulation, or you can say formula of this indicator. For that you will have to do bit of search on your own, and you can read it out on the search platforms. And here we will be more concerned with the functional aspect, the uses, how we can take the advantage of this particular indicator on this platform to help us defining of the trend. So here we have to consider the input price, the input data, which can be any applied price, the closing price, open price, high price, low price, median price, typical price, and this weighted close price. I have explained to you the differences in prior sessions also, but if you are a new viewer, again we will go through it. So if I change the applied price from close price to the low price, this plotting of the KAMA will move on the lower side. So please observe this plotting here. You can clearly see it. If now I use the high price as the applied price, then this plotting has moved, shifted to the higher price. So all these changes can be observed depending on which kind of applied price we are using. Then comes three parameters which we have to define while customizing these indicators for our need. And first we have to do is define the time period for the calculations of the efficiency ratio. First, the efficiency ratio is calculated, and it is based on the time periods price change. We compare the last candle period's closing value with the closing value 30 time period back, as we are using this time period of 30, and we then divide it by the actual volatility, the each period's price change over the last 30 candle periods. So we get the idea of the efficiency ratio. And if you want to go into more details of how this efficiency ratio and other fast MA and slow moving averages are utilized to define the KMA, as I said, you will have to read more about its mathematical formulation and how we can arrive at the final price of these KMA. Here we will see how the customization can be done, and we will leave the calculation stuff to the platform, which is what the calculations, which is what the purpose of the platform is, to make our life simpler. So that's what we are going to see, and see to it that we get the customization done right, so that we can look for the trading opportunities in a higher probabilistic manner. So we utilize these three input parameters: the time period, fast MA period, and the slow MA period. And depending on that, we will be getting the output values for these KAMA. So this is the default setup where the time period is of 30, the fast MA period is of 2, and the slow MA period is of 30. We can change it. Suppose if you want the price data to be more responsive to the recent price moves, then you can reduce these calculation of the time period. And now that I have done 10, you can see the plotting has changed significantly. It has become more responsive to the price moves, and because of that we are seeing a lot more closeness of this moving average with the actual price trend. And if now I change the calculation of time period to say larger time frame of 50, then you will see that there will be more lag, there will be of course more smoothing also, as more pricing data will be incorporated while calculating these KAMA's output value. So it will be less responsive to the immediate price fluctuations, and more data will be considered whenever this plotting is being done. So that's the advantage of using the larger time frame. And as you can observe here, if this price moves are not really significant, then the price formulation of these KAMA will be plotted closely to these price action data. But if the swings are higher, then it will take more time to respond. The lag will be a lot more. So that's what we can observe from the chart also. Now coming to its classical interpretation, I will again change these input parameters, and let's try out different combinations here. Let's take for example the 20, and we also change this slow MA period to 20. Okay, so we have the combination of 22 to 20, and let's see what's happening. So this is how the changes are visible, and it has become more responsive to the pricing data. And as I said earlier also, it will be showing some lag when there are significant swings in either direction, and otherwise it will be following the price closely. So that's how these KAMA works. And for finding the trading opportunity, you can take multiple approaches. Whenever the shift happens from one side of this KAMA to another, suppose if the price moves from lower side to higher side, you can also shift your outlook. But for that, we have to be quite careful, and sometimes it might happen that the price might revolve around these KAMA, and there might be too frequent changes. So this kind of scenarios are also have to be considered and kept in mind while designing the system based on that. Every system has some drawbacks. All we have to do is figure out the ways to minimize the drawbacks and optimize it to get us maximum amount of profit, and that's what we do. So for that, I am going to now try out another combination. Let's say we change the slow moving average period to 50 and this to 25. All right, so here we have this formulation. Now we can keep looking for shorting opportunities if the trend is in decline, and whenever we see the pricing data closer to these KAMA, if the consolidation happens and it is not really able to sustain above this KAMA, then we can look to initiate the short sell whenever this reversal kind of scenario takes place. And the inverted conditions can also be applied for the buy trade. So that is one way. We can also use multiple KAMAs with varying calculation period, and in that case we can also utilize the crossover formation where we use the lower time frame KAMA to cross above or below the larger time frame KAMA, and accordingly we can look to initiate the trade, say 10 to 10 combination or 10 to 20. So we have these two KMAs now, and whenever one KMA crosses above or below the other KMA, I will change the output combination here so that we find it much easier to differentiate between the two. Okay, so this is the lower time frame KMA, this is the larger time frame KMA. And if we design the system that whenever the lower time frame KMA crosses below the larger time frame KMA, new short sell trade should be initiated. So short sell trade will be initiated somewhere close to here. And if we invert the condition and we want the buy trade to happen, whenever we see KMA crossing and holding above these larger time frame KMA, then the buy trade will take place here. So we have moves, and sometimes there might be significant price moves and we might gain a lot. Sometimes the price swings might be quite less, and the gains might not be that significant. So it will always be different, but more or less you will be able to track the trend changes closely and you will have larger probability of being right. But when the scenario is not much clear, when the price action is rather sideways, in those kind of circumstances you will happen to lose money. So all these factors have always to be kept in mind. Now I will remove this dull looking KMA and we will see how we can make this plotted indicator more colorful. So all we have to do is look for these various options of coloring and making it attractive, whatever suits our fancy. We can go for it. We can even use two different combinations of color for determining the trend, for plotting the trend accordingly. Now you can also play with this transparency. You can increase or decrease the transparency. Then there are these options of advanced calculations. If you want the recalculation for the KMA to be done only on new candle, all you have to do is check this box, highlight the time period zone. If you now highlight the time period zone here, I can see that this calculation period is being highlighted for this indicator. So that's how the system works. Now let's again see what more we can do with this indicator. Calculate from custom data. If I opt for these options, then I have this option of using the instrument from the chart or keeping it fixed to the Euro USD. Then same can be done for the candle period. I can use it from the chart or I can also fix the candle period. So all these options are there. If you fix the candle period to say 4 hourly, then the KMA will be plotted based on the 4 hours pricing data regardless of the chart's time period. So that's how these work. Side You can use it from the chart, or you can keep it fixed to the ask side or the bid side. And if you want the indicator to be shown on all periods, then you have to check this box. Otherwise, if you uncheck it, then you have to define on which candle period the indicator should be shown. Only on that candle period the indicator will be shown. And then we have to define this base period also. Most of the time I keep it fixed at day, but if you want to change it, you can change it also. So all these options are there, which help us in making this indicator work for us. And using that, we can look for opportunities to trade, whether to go long or whether to go short. All these can be stuff determined. And we do have to keep in mind that no system is going to be perfect. It is always probabilistic. So sometimes you will be right, sometimes you will be wrong. And our purpose is at the end of the day, or you can say not every day we will be profitable. So the end of the week or end of the month, or you can even count on end of the year. So in most of the cases, we should be profitable, and lesser time we should be using small amount of money. That's always our purpose. So we have to keep looking for ways. We have to keep working for finding the methods which are going to be helpful in that endeavor. So that's it from my side for today's session. If you have any query or any idea to share, you can write back to me in the feedback section, and I will be more than happy to take the discussion forward. For further coverage of the market developments, do check out the Dukascopy Analytics page. We are also available on the Facebook. You can reach out to us there too for trying and for looking at these customization options. Of course, you will need the link for the JForex platform also. So all these useful links have been provided in the bio. Do check it out all. Thank you all. See you next time around on Monday. Till then, have a fabulous weekend ahead. Goodbye.